Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts.
Another one that we saw very strong activity in today, let me see if I can put it over here, is, Marvell, MRVL. If you take a look at that stock, that's of course one of these chip stocks. I think a lot of us probably, when we saw the chips come in with the Texas Instrument warning last night, Texas Instruments, by the way, finished with a gain of 5% today. In the after hours or pre-market today, Texas traded down below $14, finishes the day at $15.53, higher by 73 cents. Marvell, same story. MRVL trades to the upside today by 67 cents. That's almost 12%, and they bought a ton of February 750 calls. So again, that's Marvell Feb 750 calls. Take a look at that. They traded over 6,400 of those. They traded 12,000 of the May 750 calls. Very strong activity in there. When you look at a longer-term chart, longer than just 2 or 3 days, you'll see that, boy, in September, the stock's $16.50, or in late August, $16. So in the single digits here, could it have a little pop to the upside? I think so. I mean, I'd certainly be positioning for that rather than for some of the other, for a continuation of the sell-off. So those kinds of things, I think, help you move the odds into your favor, whereas a lot of folks end up playing the wrong side of things by getting on a momentum play like Marvell and getting on, or dry ships, with just a naked call purchase. I love doing them with bull call spreads unless I'm catching them right at the beginning of the move rather than at the end of the move. Another stock that I'll show you is, hold on, I'm just going to take this off. There we go. All right, another one that I'll show you is CENX, CENX. If you take a look at this one, some unusual activity in this one today, and as CENX moved up as high as $8. It began the day under 7. Very strong activity in here. It's Century Aluminum, and if you watch Pete regularly on Fast Money, you know that some of these aluminum plays have been getting unusual amount of love lately, and a lot of folks focused in on them. So I'd say that one's also worth watching and keeping your eye on during the next few days, because the wonderful thing about options as well, folks, is that when somebody's buying a stock, they're not telling you when they think something's going to happen. They're just, all you know is somebody bought a stock. Are they buying it for a 6-month move, for a 1-year move, for how long a move? On the other hand, when people are buying options, they're telling you when they think the event is going to happen. Some of it may be informed order flow. Some of it may be best guess. But I'd say following the smart money has certainly served us well, and I think to the extent that you see unusual buying of calls, that's bullish, unusual buying of puts, that's bearish, and I think you're stacking the odds in your favor, going with whichever side the big money, the fast money is playing on, especially since they tip it off as to are they betting to the upside, and in what time frame? Is it December, January, February, what is it? Should we answer some questions, Mark? Or I'm sorry.
That's okay.
Sorry, Stephen. I threw out Mark's name again, but
No.
should we do some questions?
That's my colleague. Yeah. Let's do a couple questions. One was about your volatility charts. I know that you're not showing us your platform, but a lot of questions about how investors could look at volatility using TradeMonster. Is there anything that you could share with us as far as your volatility charts, John?
Well, the nice thing about having all the different stuff that the TradeMonster site has, and by the way, you don't even have to fund the account, folks. If you go to TradeMonster and open an account, you can use all the toys, all the institutional and retail educational products that are on the site. There's no cost to any of that at TradeMonster. If you don't fund the account over the next 30 days, they'll eventually cut you off because we're paying for the data that populates all of that. But if you went over and checked out TradeMonster, you'd see that we have the ability on the site to give you almost any way you want to look at the market. Again, you can decide in the next couple of weeks with the newest iteration coming out, you'd be able to pick not only the layout of the page exactly as you would like it, but also the colors of the page. We'll have a whole bunch of different color choices for you as well. But you could set up and say, I want my stocks that I'm watching over here on the right, or no, I like them over here on the left. I want the news over here on the right or on the bottom or in the middle. You arrange the whole page however you like it. You can take and look at the volatility charts and so forth on the site. Next time, I guess, Stephen, I'll send you a bunch of those slides and we can go over those. But I think it's the reason that Pete and I built the TradeMonster site for trading was this is what we were using for trading on. This was the platform that we built because we wanted something that would be fast and something that would populate everything from individual buys and sells to complicated spreads and even basic spreads like bull call spreads. They're not terribly complicated, but to have to leg them on your own isn't always the best idea. When you submit it and you click, buy it or sell it at this price, if that's the price in the market, you're going to buy it at that price. You're not going to pay a penny more. You can only pay less because you've submitted it as a spread. I think a lot of people end up getting into longer-term investments because they got in a bad trade, and rather than spreading it off like they were supposed to or like they intended to, they tried to leg into it. They timed it. They got caught on the wrong side, and they ended up riding that trade for days, weeks, or months while they tried to wait for it to come back. Not necessarily the smartest way to play it. And I think with the markets, most markets, we tend to avoid single-listed stocks because we view them as a bit of a roach motel. But stocks and foreign currencies where there are lots of participants, I think are great places to be because they allow you to have a lot of liquidity providers in there, in that particular contract. So it makes it a lot easier.
That's a very good point. Very good point. John, how about, let's see, we got a question here from Raymond about VIX, and how much longer do you see volatility being at these elevated levels? Do you see 2009 being, I don't want to say more of the same because this is really unprecedented, but do you think it's ever going back to that 20-25 range in the next 6 months?
I'd say absolutely not. Within 6 months, I mean. I think it will, Stephen, and I bet that you would echo this, that when you've been around the markets, folks, and traded, as Stephen and I have, for I won't say how long, Stephen, but for a long time.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.